Hi, everyone. Thank you so much for joining us. I'm Jen. I'm your host of Blockchain Banter. I am here with Mento and Bancor. Marcus, you are the CEO, founder of Mento. Am I right in saying that?
Yes, absolutely. I'm one of the founders of Mento, the CEO at Mento Labs. Mento is a platform for local currency stablecoins. In the end, the idea is to launch a transparent, decentralized stablecoin for every country in the world. Thanks so much for having me. Looking forward to our conversation here today a lot.
I am also. Thank you so much for joining us. That's definitely a big goal. So I really look forward to kind of digging into where it kind of began and what you've accomplished so far in this, because I've been following Mento a little bit and I want to highlight some certain things you guys have been doing recently. I also have Dr. Mark Richardson from Bancor. Mark, thank you for being here. Would you also give us a brief intro, please?
Yes, certainly. My name is Mark Richardson. Before I was working in blockchain technology, I was a organic synthetic chemist. So I finished my PhD at the University of Melbourne, my first postdoc at the University of California, Irvine, and my second postdoc for the Australian government at the Commonwealth Scientific and Industrial Research Organization. And then during the pandemic in 2020, I was stuck at home due to lockdown procedures, and eventually became interested in blockchain and cryptocurrency. Began working for Bancor in 2020 first as a DAO member, then as a full-time contractor in 2021. And I took over leadership of the project in October of 2022.
Thank you. Marcus, is Mento your first project that you started in blockchain? Like once you first got into this, was this like your passion project and the beginning of it all for you?
Maybe the first project in the space for me was working on Cello. Bit on my background here, so I'm coming from an economics background. I did a PhD in economics, monetary economics, and portfolio theory. Was working as a postdoc researcher at the University in Munich and the Columbia Business School in New York, and always worked in that traditional economics and traditional finance field. After that, I worked like also in TradFi with like different asset managers and banks at JP Morgan, Merrill Lynch, Allianz Asset Management Group, and others. And then around like 7 years ago, a very good friend of mine told me about the idea using blockchain technology to basically bring financial primitives to folks who don't have the same access to the banking system as we do, to build something really inclusive, to build for the mobile phone. And he told me the name of the project is Cello. I got super interested in the field. I from day one on Cello, the idea was to build for end users, to build for people who, as I mentioned, don't have the same access to financial primitives as we do, for example, here in Berlin. And this is still the idea now with Mento for Cello. When we started, it was clear if we want to build infrastructure for financial inclusion, we need a scalable blockchain. We need a blockchain that is running or can be accessed easily on low-end mobile phones. But we also need to build infrastructure that includes stablecoins, because stablecoins in the end are a function or an app on blockchains that allow for stable transactions that can be like saving, lending, borrowing, payments, remittances. And therefore, this was from day one what we wanted to build. Cello is an Esperanto word for purpose. Mento is an Esperanto word for mint. So in the end, Mento is the stablecoin mint on Cello. And at some point, it was clear when Cello became bigger and bigger, and also is like a fully decentralized mainnet. We need to have a separate project that is focusing on these stablecoin use cases. Therefore, Mento Labs spun out from like the core dev team working on Cello. I did the spin-off, so it's maybe now I would say the second project in that space I'm working on. but with still the same mission and the same ideas.
So let me ask you then. We talked about, like you mentioned, why stable coins are so important, right? And we talk about this often, just the opportunities that you'll have for it. But why, like, the local digital stable coin? Maybe we could talk about that a little bit, right? I mean, there's so many beyond just USDC, USDT, or DAI that we all kind of think about. Why was it so important to you and to Cello to have that local
Yes,
stable
it's a
coin?
very good question. And I mean, especially here in that space, we have these great products already live. I mean, if you look at, for example, the user numbers of USDT, there's more than 1 million daily active users around the world that are using Tether already. It is really accessible also in many frontier markets and young economies around the world, in different African countries. It is like really, really accessible, and it's highly liquid. And therefore, I think this is a great product that enables a lot of things. For me, especially in these markets where there's inflation, also where the local currency is losing value, for example, against the dollar, easy access to a dollar stablecoin is an amazing use case, because it allows people to, for example, save in a stable currency and therefore maybe get out of the problem of inflation in these countries. However, there are like many more use cases that can be unlocked with stablecoin, and like just saving is one very great way to use stablecoins, but there's more. There's, for example, on-chain FX, like having a very efficient way to settle transactions, FX transactions, but also to engage in FX trading, FX forwards, FX futures, FX options. There's applications in microfunding. There's applications in on-ramping, getting new users into the Web3 ecosystem that might be extremely efficient when we have local currencies. But for me, one of like the key use cases I wanted to chat a bit more is actually access to credit. There's like a huge credit gap in the world. And I think in many countries, having this credit gap is like preventing many entrepreneurs to grow their businesses. There's a lot of creativity. There's a lot of like everything is there, but maybe access to credit is missing. And when like a small business, an entrepreneur, a business owner, a merchant needs a loan and they don't have access to a bank, they could get a loan on chain. Now, if there were only dollar stable coins, that would be a problem because it would expose these small business owners to FX risk. These like small and medium businesses, entrepreneurs, they have revenues in local currencies. They need to pay back their loan at some point. They need to pay for their input factors in local currencies. They need to pay taxes in local currencies. But most importantly, their revenues is in local currencies. And if they only would have access to a dollar loan, and if their local currency would lose value against the dollar, it becomes more expensive. And therefore, they would be exposed to FX risk that they shouldn't have if like they are in a different business than that. And therefore, I think this is a very important example among all of these other use cases that I mentioned in the beginning, why I think local currency stablecoins are extremely important. And therefore, the initial projects now we are partnering with are often in many different countries like micro lending projects that make loans accessible on chain for their users. And then we also partner with, for example, remittances companies and projects around the world, because this is another big use case for stablecoins, being able to send money across border.
Do you find that there's a big knowledge gap? Well, let me bring it back here. What was the first? I mean, I know that recently it was the It was in the Philippines, right? You did the Philippine
Yes,
peso.
Philippine peso called puso,
Uh-huh.
which is in the Philippines a word for heart. This is a Philippine peso stablecoin.
Where was the first stablecoin that you guys had created?
So the first one ever on the Mento platform is a dollar stablecoin. Then we had a euro stablecoin. From there, next one was a Brazilian real. Then afterwards, a West African franc. Then a Kenyan shilling, and now the latest addition was the Philippine peso. And for these different currencies, I think like different use cases could be like big use cases bringing in a lot of end users. I think especially in Kenya, microloans is an amazing use case. And we just did a longer like research project with different partners like Haraka Finance and others on the ground on micro lending and how users could access a loan in this CCAS, the Kenyan shilling stablecoin from Mento on chain. For the Philippines, for example, I think also the remittances use case is a huge use case. On the Philippines, people are like distributed over many different islands. There's not always a bank in reach. And also in the Philippines, people travel the world and work like in many different countries and want to send money home. There's huge remittances flows to and from the Philippines. So I think these are both like perfect use cases for local currency stablecoins.
Mark, I also noticed that you mentioned the Brazilian real, right? I was looking at Carbon DeFi's deployment on Celo and noticed that there are different pairs, that are, trading pairs that include the Brazilian real and some of the others that Marcus had mentioned. So we're talking about loans and remittances and things of this sort, right? As a DEX, what do you really see as the major advantage to having these sorts of opportunities? Like, why are we seeing these new strategies being created on Carbon DeFi?
I mean, where there's an opportunity, people will, rise to the occasion. In this particular case, like it's easy to accuse people that are participating in these kinds of things as being extractive, but in the case of Celo and the people that Celo are working with, I would describe it as more philanthropic. Like it does have a very a very sort of ethical head on its shoulders, more like, which is very unusual for the blockchain space, I'm sorry to say. But yeah, I think that the reason why we see these pairs appearing on Carbon DeFi as opposed to like some of the other DEX infrastructure is like
or
because
trading them in general, sure. Right?
Yeah, trading them in general. I mean, the short answer is when there's demand to trade something, a market will appear for it. And so like this kind of leans into what Marcus was saying in a pretty heavy way, which is that there is clearly demand to exchange between these things. And whether it be for remittance or credit, as Marcus was referring to, or for another reason, I would stipulate that there are those people who are living in those jurisdictions who have, let's say, a credible fear for the inflationary nature of their government's economic policy, and that to remain exposed exclusively to the currency with which their government has, with the government's fiat currency, might not be a good idea. I'm in every family. I think that there's some elder who has often remarked on the fact that their property taxes this year are like more than what the house was worth when it was purchased, for example. There are, and this is true everywhere in the world, but there are times in history, and history is kind of punctuated with these anecdotes, where people would move from having to carry their cash in wallets to wheelbarrows. And like we've seen this in Germany after World War One. Certainly we've seen it in places like I think I want to say Mozambique, but I may be confusing it with another country.
Zimbabwe,
where like Zimbabwe especially, yes. there are, there are these problems where, the inflation rate is just so high that to save any of your money is demonstrably a mistake. And that begs the question, like, if you're not saving the money, then what should you be doing with it? Because a lot of people still like the idea of having savings, either saving for something that they think they need to purchase in the future, or just for, the security of if something happens,
a security
and they need to, like, repair their car, security blanket, that there may be other currencies that are better suited to that. And what's interesting is that people may not always agree on which currencies are better suited for what. There are a lot of people in the world that look at the US dollar with envy, but there will be people in the US that are still, I would say, credibly frightened about the rate of US inflation. Something like 80% of US dollars have come into circulation over just the last 5 years, which is technically a hyperinflationary.
80?
I think it's 80%. I mean, I read that on a tweet yesterday. I didn't fact check it, but it sounds about right.
I mean, I just wanted to make sure. I didn't know if you were saying 18 or 80. I just wanted to make sure that 80.
Yeah, I think the monetary supply has quintupled in 5 years, something like that. And even if that number is exaggerated, and there are more than one reason why that could be exaggerated, like you can look at just the hard numbers and that might actually be true. But due to other market factors, liquidity, and other things, that the inflation rate actually isn't effectively that high. But is that if you are a civilian and you are looking at these things and worried about them, that being able to transact between the currency that you have and the currency of a government that you do agree with their fiscal policies, that should be something that you can do. And before the blockchain experience, and especially before Celo, which was actually as Marcus said, designed to be accessible from things like smartphones, and inexpensive enough that there is a very low financial barrier to entry, which is something that, for example, Ethereum struggles with and many other blockchains struggle with. But yeah, that low access, that low barrier to entry, combined with a relatively deep and accessible market for other currencies, I think is all that was required. And clearly, like, if you create these things, you find out very quickly what the interest is in using it, and clearly there's an enormous amount of interest. So the things that I'm saying are speculative in the sense that I haven't interviewed any of these people, but it's very I think that it wouldn't be controversial to say that these are relatively obvious motivations, but I can't be certain.
I think there's, like, to double down on two of your points. So one, what you mentioned in the beginning, if there's a need for a market will come into existence, a market will exist. I think this is really, really important when we want to launch like many different stablecoins in different countries and make them accessible. Liquidity is like a big piece of that. You want to have them accessible, but you also want to have them accessible at the right price, which means they have to be liquid. And therefore, to have like this in every country, we need good infrastructure. And I think this infrastructure is now like in our space, in the Web3 space, more and more coming together that this is actually possible. So when I'm talking about like liquid stablecoins for like users that need a small loan in Kenya outside of Nairobi to build out their shop, to have liquidity in that specific place, we need to have a functioning market. And therefore we need places like Carbon DeFi that allows users to do a lot of different things, to do like order strategies, to have like different order types, so that there can be actually an efficient market for these stable coins. And therefore I think, yeah, this is like infrastructure that is super important. And also about like the different currencies that you mentioned, like it can't only be the dollar. In the end, it's like also about giving users a choice what they want to use. I mentioned that micro lending is or is a good use case for local currencies, because then users are not exposed to FX risk. But at the same time, it is not only micro lending. Also, if like I'm based in Berlin in Europe, so maybe projects here in Europe want to rather use a euro than a dollar for their transactions, for their trading, for all of that. Because they also don't want to be exposed to the FX risk to the dollar. And I think this is something that is now just happening. In the past, even traders in DeFi, they didn't care about like the FX risk, because everything they traded was so much more volatile than FX. Now, maybe also this market matures, and then like FX risk is like a real factor in their trading strategy. So they need access to different currencies, and maybe also they want to then use the different instruments to bring in the end their FX trading strategy on chain. So all of this infrastructure here is now actually emerging and super important for these use cases.
Marcus, why did you guys go with the Brazilian real first? Well, I mean, you did the stablecoin and the euro, right? But in terms of the local digital currency,
yes,
that was your first. Why?
I think in every country, what like Mento needs as a stablecoin platform is strong partners on the ground that have end users and have a need for a local currency. I mentioned in the Philippines and the Philippine peso called Puso. Here, this one was launched by the Celo Philippine DAO. And in the Celo Philippine DAO, it's not only Celo community members, but also like corporate community members and projects like, for example, PDAX or Gcash. And they have users in the Philippines, and these users have a need for a local currency stablecoin. So it's great then to launch in the Philippines. In Kenya, for example, this was initiated on the forum actually by the Celo Africa DAO. Celo Africa DAO has an amazing presence across Africa. I just like 2 weeks or 3 weeks ago, I was at ETH Safari in Kilifi, where there have been like a lot of community builders, and you could really see like this huge presence Celo has there on the ground. If you want to build something cool, you probably dare build on Celo, and this is because Celo Africa DAO is doing such a great job in supporting builders. And in Brazil, it was the same. There was like basically a strong community in Brazil already back then. In Brazil, it's interesting because with the PIX, like as first central bank digital currency is live, but still users there want a choice in terms of what stablecoin they use. Some users maybe don't have trust in like stablecoins issued by banks or by the government, and therefore they want something that is like fully transparent, on-chain, decentralized. And therefore, I think Brazil was like a really interesting first experiment for us. Still, in Brazil, we also learned it takes some time to find traction for a local currency stablecoin, because projects only start to implement and include the stablecoin once it's live. So there's always like these chicken egg problems you always have in this field, where on the one hand, for example, wallets only want to integrate when there's a lot of users, but users cannot use it without any wallets. So that is always like a fun game. And especially here, when we talk about end users and not always like pure trading use cases, I think this is also a long game we have to play here. Reaching these end users in these different countries only goes via local partners, and local partners come up or take their time until they then like become active, use a stablecoin and so on. So I think for all of these stablecoins I mentioned, the Brazilian real, the Puso, the Philippine peso, and the Kenyan shilling, we still need like some time to bring together a lot of partners that then have a lot of users, but we're getting there.
Right. You mentioned the wallets and stuff, it does make so much sense. It's kind of a you first, no you first, well, we'll do this if this, but we can't without this. So it makes sense. Mark had mentioned that the financial barrier to entry, wasn't there. Celo is extremely inexpensive to transact on, and I think from the beginning, the core, I mean, when you read what their mission was, when you learn about Celo and what they're doing here, in the industry, this was kind of what it was and remained unchanged throughout all this time. From the first time that I had spoken with Renee, this is what the vision was. And they just seem to be really building on that and not swayed by other things that might be happening. This is it really does seem like it's just this blockchain, this for the good of the people, right? And I think it's just so great. But have you found that, you have your challenges with the wallets integrating and things of that sort? What about the knowledge? It's the local communities that are asking for this, but when it comes to actually using it, have you found that this is easy for them to grasp these new concepts or these new sort of experiences and transactions? Are we at the point where the wallets have been integrated and they're actually in use? Like I said, I see them on Carbon, so I'm thinking so. What have you found there?
I think we're getting there, and maybe similar to what Mark said, wherever there's like a need for a market, the market comes up. Wherever there's also a need for a certain like technology or something like stablecoins, then people actually will use them and find out how to use them. I think like we've seen a lot of improvement in the general infrastructure across the board over the last years that now enable these end user plays. You mentioned Celo has been focused on stablecoins from day one. And I think you can really see in the end user experience, you can see proof in the end user experience. On Celo, it's relatively easy to send transactions from phone number to phone number. So you can find other users of the blockchain via their phone number, via Social Connect, which I think is a super important feature for the end user experience. The gas fees are low, you mentioned this, but in addition, the ability to pay for gas fees also in stablecoin on Celo is super important. If I'm a user that only has Kenyan shilling stablecoin in the wallet and I want to send funds to my friend, I don't need anything else for gas fees. I can pay for gas also in Kenyan shilling stablecoin. The need for anything else not only makes it complicated, it also brings in a volatile element because often these like gas fee currencies are volatile. And therefore, I think this is also an important part. And then also the fact that transactions are fast and cheap and settling fast. I think this is all super important. We've seen in this like pilot we've done with local lending circles called Chamas in Kenya that we now did, that like now we are at the point where we actually can work with users who never interacted with a blockchain, who are not DeFi degens, and like maybe are experts in their fields and sell like groceries or like entrepreneurs from all different like backgrounds. And now we're actually at a point where wallets are easy to use. In this pilot in Kenya, it was a wallet that is called ClickSpacer. There was like an on-ramp, Kotani Pay. There are other wallets that become easier and easier to use. Valora, for example, is an easy user experience in the Celo ecosystem and it's been around from the start. But also, for example, MiniPay by Opera, a wallet that is growing super fast across Africa because it abstracts away this like typical Web3 experience. It's like a lightweight wallet, just, I think less than 2 megabytes. And it's a super easy user experience in MiniPay. And I think that all of this now exists is, I think, a turning point that we now have end users or we can enable end users to use this technology. And therefore, I think it's important.
It's funny you mentioned gas in a stable coin, right? Not just in Celo or And I was on LinkedIn the other day. I saw one of the founders of Blockworks, Blockworks, and he posted a screenshot, and it was, he didn't have enough gas on this, chain. And this was the problem that he was saying. And he's like, people were laughing. They're like, dude, you've been in here for 6 years. And he's like, I've been here for 6 years, or doing this for 6 years. And this is still an issue that I'm running into, and kind of laughing at himself for really not knowing what to do next, or like, what's my move? I don't have enough of this to make a transaction, to get enough gas to make my other transactions, and kind of laughing at himself. But this is an issue that we often face, right? So it's really nice that there is that solution on Celo. We have a question. Go ahead.
And we had just one more example for that. We had a colleague visiting us also at ETH Safari in Kenya. And she was coming from Nigeria, and she told me that as soon as she landed in Kenya, she only used MiniPay and CUSD stablecoin for payments for the whole time she was in Kenya.
Really?
And I think this is really cool to see that this now already works. On the other hand, you also, what you've mentioned with many other projects and things that have been built in Web3, for me, in Berlin, it's probably still easier to use actually cash or card or the phone to pay, and therefore
in Berlin, they often refuse to accept cards. You have to use cash.
That is true. Berlin is the cash forward. But if I'm anywhere else in Germany except Berlin, then I think it's relatively easy. So if we want to also grow in these markets, we have to have this easy to use infrastructure. Otherwise, we cannot grow to the size that traditional infrastructure has. But we have a huge advantage. Everything we build in some way is interoperable and open source, and can be integrated in different projects, can be used across borders. So we should use this advantage, actually, something that this industry hasn't done in the past.
It's funny. Now that you bring that up, talking about cash versus card, you mentioned your phone. I just expect to pay with my phone everywhere I go now. I like my cash. I don't necessarily like spending it. I like my cash. But if I go anywhere, it's usually the tap, and I pretty much count on, I was somewhere recently, maybe a couple weeks ago, and I had done some shopping with my son. I went up and I'm like, this isn't working. We don't have tap to pay. I was like, oh. And I suddenly, I didn't know what to do with myself. Do I even have my cards on me? Do I even have cash on me? It was just kind of, so this mobile forward, mobile friendly approach. I think this is where you said, Berlin might be an exception to this, but I definitely see this being an advantage. Now, when they had landed in Kenya, and this is what they had used throughout their time there, this is because, local businesses, what sort of payments was it were being made? Was it to local businesses? Was it, I don't know how it works there. So excuse me if I sound silly, right? But when I go somewhere, I generally get a ride from the airport to where I'm staying. I have to pay for the taxi. I was just recently, it was a conference. I don't remember where it was, maybe Brussels somewhere. They didn't want a card. They wanted cash. What sort of businesses are you seeing this is being adopted by, or who were these payments being made to?
No, it's an excellent question. And I think it took really long until we got there, but now this is possible. There's the nice thing is that this infrastructure, as I mentioned, is interoperable and open, and therefore can work with many different partners across borders. In Kenya, the biggest thing when it comes to payments is mobile money. The biggest mobile money provider in Kenya is M-Pesa, but M-Pesa actually only works if you have a SIM card from Safaricom. So if you have a different provider, if you travel to Kenya and use your local provider, it could well be that actually M-Pesa doesn't work for you. So what we have here with this infrastructure is now actually much better, because it works with any provider in every country. When they came to Kenya, they used MiniPay, and MiniPay has this app ecosystem that allows different dApps to offer different services. And then there's a dApp that allows you to, for example, pay your Uber when you want to get a ride from the airport. There's even like on and off ramps like PhoneBank, for example, PhoneBank, that allow you to convert stablecoin into airtime. There's apps like Pretium that allow you to actually pay stores that only accept M-Pesa. So in the end, what Pretium, for example, built on top of this wallet is infrastructure from stablecoin into mobile money. And I think this is the beauty here now. So no matter like where you are and what like payment system works best, there can then be local projects that adapt to it. Because I don't know, or I also didn't know how it would work in Kenya. So I would be the wrong person to build all of this. It should be projects on the ground. And then, for example, something like Pretium that allows a payment from Opera MiniPay to a merchant that only accepts M-Pesa is like a great project that came up there.
I want to follow this up with another question then. Talking about the projects being formed on the ground, right? Like I have seen that certain areas in Africa, I mean, they have a big Web3, a big interest in Web3. They're involved, they're participating in different hackathons, things like that, right? You were just saying that there are different conferences you guys have been attending lately. Are these, when you say on the ground, it's not located, globally that are there on the ground presenting this? You're talking about locals, or are you speaking about locals that are creating these projects to better and to enhance what it is that's already being built?
Absolutely. These are like really projects that are there in Kenya on the ground, local builders. A lot of these local builders actually came out of the CCAS Mento hackathon, came out of Cello Camp, came out of like MiniPay hackathons, and now are building these local solutions. So that's amazing.
So beautiful.
Yeah, absolutely.
It's
and
so
it's amazing
great
that there's like this huge pool of talent on the ground that wants to exactly build that, something for their communities or for their country. And I think for me, this is the best thing of this industry, that it's not that we are this like Silicon Valley walled garden company that like brings technology to other countries of the world. In the end, we bring open infrastructure, and hopefully then local builders can use this infrastructure to build out profitable businesses. Africa has one of the youngest population, or has the youngest population on average from like over all continents. Africa, like in most or almost all of the countries, are like very open to use like mobile money to bank on their phone. In that regard, they are like so much further than we are, for example, in Berlin, where I still need to use cash here and there. And therefore, I think it's perfect ground for innovation and actually local innovation.
And Mark, this is something that Bancor had, Bancor was on the ground in Kenya back in 2018, right? So kind of speaking to the original vision of Cello and Mento, this seems to be something that Bancor also had this similar vision. What 2024, 6 years ago, right? When they had first started.
Yeah. So the mastermind behind the AMM model was a gentleman named Eyal Herzog, and if you listen to him talk about like the reason why, so the several of the products that the Bancor founders had created, because before Bancor was another product called AppCoin, which was basically a community issued currency. This is before blockchain, so it was really just points on a server, if you can think about it in those terms. But yeah, people would pay for services with these community issued currencies. And the inspiration behind that product was to look at something like Bitcoin, and combine that with EL's prior experience building a video sharing website called MetaCafe, which was a competitor to YouTube, and where y'all thinks the failure was in MetaCafe and like why YouTube was so successful was what he called the long tail of consumption. So where MetaCafe would very deliberately and very explicitly focus on like what is popular, it was very prescriptive in the kinds of recommendations that it would give people, whereas YouTube was a lot more flexible in its recommendation algorithm, and actually the majority of the consumption, right, like 99% of the consumption on YouTube was videos that were only getting like a handful of views, but this is the reason why people were showing up to YouTube. And so he was inspired by that experience to really endorse this idea of like, now there's something called Bitcoin, which he refers to as a user generated currency. And so in the sense that the way that video media was being consumed on the internet, he suspected that cryptocurrency tokens would be consumed in more or less the same way. In a sense, that kind of foreshadows what became known as like the meme token economy. Like the stuff that people just create and just like engage with it in the same way that they engage with viral videos on media websites. But yeah, I think what you're speaking with in Kenya, like what Bancor was doing there was really this like community generated currency stuff and building an AMM for them and that kind of thing. But it was very much speaking to this long tail of assets. And while I still think that that's valid, and obviously it's valid, the entire cryptocurrency world has completely blown up with user generated tokens. What we shouldn't do is conflate that interest and that engagement with like fundamental like financial needs, like in sort of the human rights sense, like the necessity of life sense. And that's where the stablecoin component comes into it. So yeah, I think that Celo and Bancor, we're kind of approaching this same demographic, but from like slightly different angles. Because where Bancor was happy to say you can create whatever currency you want and we can show you how to use it and that kind of thing. Celo is a little bit more pragmatic, and I mean that in a good way, right? Rather than you have the responsibility of operating and maintaining your own currency. It's like, well, instead, we can take the currency that you're already familiar with and just bring it to a blockchain. And what's interesting is that now we actually have met in the middle, and the infrastructure that was enabling community currencies is now enabling stablecoin markets based off of a fiat currency. But yeah, it's absolutely we're doing more or less the same thing, coming at it from a different perspective, but yeah, have absolutely met each other in the middle.
We have about 10 minutes left. There's a question that came in from a LinkedIn user. I don't know if you guys had seen it here in the comments. I'm going to put it up here. I want to get both your opinions on it. Can you see it up here?
Do you mind if I read it out aloud? It's quite a lot. Dollarization or currency substitution is certainly better than continuing to live with debased soft currencies. But honestly, how sustainable is the second best approach for a world heading towards dollarization and maybe 7 to 8 harder currencies? This would lead to a massive fiscal dominance, power asymmetry, and an increased empowerment of the state in the currency economies to which stablecoins are pegged. What are your thoughts about these issues? Yeah, it's a totally reasonable stance. And to come back a little bit to Bancor's origins, before Bancor was launched properly, its white paper was being circulated. And the Bancor founders met a gentleman named Bernard Lita, I think in the Netherlands. And he was one of the people that was instrumental in creating the euro, as we now know. He's accredited as being one of the co-inventors of the euro. And in the documentation around the time, including from himself, he says that the actual design, like economic design for the euro, was like bastardized during policy steps and so on. But the reason I bring him up is that he's written entire books. Like there are volumes that he has written on the risk of there being too few currencies. And that the drift towards what this user is referring to. He said 7 or 8, but I think that even that's a little bit too generous. This idea that there could be 5 or fewer, like actual, let's call it world reserve grade, currencies that it's very, very dangerous. And yeah, the early discussion surrounding the launch of Bancor and how it interacts with blockchains and what blockchains even mean. Even in the context of things like Bitcoin and Ethereum themselves as being actual legal tender or could potentially one day be legal tender, was viewed by everyone in that in that circle. Like people, like, again, I reiterate, were instrumental in bringing about actual world reserve currencies. Were critical of the fact that there are world reserve currencies at all. And in a way, bringing some of those stablecoins into the blockchain also helps people access this much broader, a much wider view of what currency might be considered tenable. So, for example, people on the Celo blockchain might take an interest in, having part of their wealth denominated in the Celo token, which is a totally reasonable perspective to have. And there are, payment methods that can accept things like the Celo token. And there always will be. And so I think this proliferation of different things that people use as currency is good. And it's okay, to use, just because we're developing better alternatives, or not even better alternatives, but just alternative currencies at all, doesn't mean that you should shake off the currencies that are already established, right? It's very hard to argue that that we should all just abandon the US dollar and use Bitcoin. I know that many BTC maximalists feel that way, and I understand their perspective. But the reality is that Bitcoin is much, much too volatile to withstand that kind of use case. And for all those people in the Bitcoin community, it might even feel like bittersweet to have Bitcoin become so stable in price that that it can be used that way. So I think it's okay to use stablecoins as kind of like a stepping stone to show people a broader variety of what they might consider monetary, like what they might consider cash. But yeah, I think I've probably spoken for too long on that, but I hope that addresses the question.
No, I fully agree actually with what you've shared here about, in the end, it's about the user who uses these currencies, and there is value in giving the user a choice. I think especially when it comes to fiat currencies like the dollar, they only work if basically as long as you can trust the institutions behind issuing the dollar, and also monetary policy is not always super effective. Within monetary policy, there's a lot of assumptions that need to hold for monetary policy to be efficient. Central banks need to estimate how often a dollar basically changes hand. They can only set the interest rate as a lender of last resort, but they have to rely on other lenders in the ecosystem to forward either higher or lower rates, so that their monetary policy becomes efficient. And therefore, there are certain problems with these fiat currencies. With this new technology, we actually make money a technology and give users a choice. With now stablecoins, and actually more than stablecoins, the whole Web3 ecosystem, you could imagine, even more local currencies than a Kenyan shilling, a currency for a certain like community or a currency for a certain sector. And if like the certain sector fares well or not so well, you could directly incentivize transactions. Like there's so many opportunities here that can make money as a technology much more efficient, that I think this is actually a positive thing, that we have more than either just one currency or 7 to 8 or 5 currencies. We actually have like a choice.
I almost started talking. I had to fumble around for my mouse and my unmute, so I apologize. Thank you so much. I also want to thank the viewer for submitting their question and their thoughts as well, participating in the conversation. I always like to encourage our viewers to do so. Marcus and Mark, you guys have both been absolutely wonderful. I genuinely enjoyed the conversation and really enjoy following along what you guys are doing. I have questions. So Marcus first, these stablecoins, these currencies are sprouting up from the local communities and things. How are these formed? And like, what is the process behind this? I know we're at the top of the hour, but I want to, if somebody wants this, right? This is something that my area, like we could use here. How is that community initially formed? Do they reach out to you? Is this through Cello?
So actually, this is something that is now changing. There is now, in the past, the Mentor platform was governed by the Cello token. And because there is like a clear government or governance need for the stablecoin, we are right now in the process of separating governance from the L1, soon to be L2 governance, to a separate Mentor governance. So in future, there will be a Mentor governance token, and every Mentor governance token holder can vote on many different things. How, for example, yield on collateral is used, what should be the next currency to be issued. So there's like the Mentor forum where people can engage and talk about where they see a need for a local currency. There's the Mentor Discord and Mentor Twitter at Mentor Labs, where people can also discuss like where there is a need for a local currency. And then it's fully on-chain governable what the next currency is that should be issued. Therefore,
Amazing.
Bring back this platform to every user who's using.
It's literally community just at the core, and then branching out into community. Right. And Mark, what about Carbon DeFi? If somebody wants to go on and they want to participate in some of these sorts of trading activities that we had spoken about earlier, they want to kind of expose themselves to certain things. What would be the easiest way? What is the DApp for Cello? Or I could just say it. We all know I'm a Bancor contributor. It's cello.carbondefi.xyz. You can go to cello.carbondefi.xyz. You can explore the different strategies that are there. You can combine any two standard ERC20 tokens, see how they trade against each other, see what sort of opportunities that brings to you, and how you can kind of take advantage of maybe, I don't want to say, Mark, what word am I looking for? Holding a simple. Go ahead.
Yeah, so a couple of things I want to point out, because I think that for both people that have been thoroughly entrenched in sort of the, let's say, the DeFi economy, the blockchain culture for a long period of time, and also for the people who haven't been, I think that the kind of flexibility that you get with Carbon DeFi on Cello might feel unfamiliar to both of those demographics. So what do I mean by that? One is that in general, when people think about providing tokens to an exchange, or liquidity provisioning, as it's commonly referred to, in general, they think that they have to provide like both of these assets at the same time, or that they're providing what's called a concentrated liquidity position, meaning it's going to buy and sell these tokens, and so they might not get, they might get the exchange that they wanted, but then it will reverse if the price capitulates back, and so on and so forth. But you can actually just state the exact exchange rate that you want to receive. So for people that haven't been to a blockchain before, just know that even in this kind of FX type environment, you can offer the price that you are willing to take rather than being forced to take the price that someone else is taking, or the price that someone else is offering you. And then similarly, if you have been in blockchain for a long time, this isn't like LPing in the sense that you're used to. This is literally like offering your bidding and asking prices and waiting for the market to take them from you, in the most arbitrary sense. So the infinite flexibility that you get should feel fairly unfamiliar. But I understand we're at the top of the hour, and Marcus has a pretty hard stop. So I will leave it there. But just saying, you can check your pre-apprehensions at the door. Carbon is something that's pretty new, not just for FX, but also for DeFi and decentralized exchange.
Well, thank you so much. If anybody, I always make myself available if anybody has any questions about Carbon DeFi, about Celo, or even like Mento, I can at least connect you. If I don't have the questions, if they're not with Bancor and Carbon DeFi, I'm here for any questions that anybody might have. Thank you guys again so much for joining me. Thank you again to all of the viewers. Really excited to see you guys continue to grow. The communities continue to build, and just following along, and Mark, I'm going to say it. If we ever, Bancor ever decides to participate in one of these events on the ground in, Africa or wherever they happen to be, I would love to be the representative there. So just throwing it out there. I hope to see Bancor involved in this, to some extent, a little bit more so. Thank you guys so much for joining me, and I look forward to next time.
Absolutely. Thank you so much. That was really cool. Thanks.
Thank you so much. Thanks, everyone.
Thank you.